Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. We're going to go over oil and gas technical analysis. Again, I view this world through technical analysis. I view it through charts. And what I do is I stack data all up. I stack long-term charts, short-term charts. I stack valuations, which is ratios. And I stack market conditions, which is residential real estate and where we are in that cycle. Where we are in that cycle actually determines asset values. Weird, huh? The conclusion that I came to. So really it's demographics and the condition of the housing market, which depending on where we are in the housing market, if it's an expansionary phase where the demographics are favorable for an expansion, it is an inflationary period. If it's an inflationary period, it has an effect and puts pressure on interest rates to go up. A rising interest rate environment puts pressure on stocks and bonds to go down in price because their PE ratio valuations go down under an increasing interest rate environment. That money then floods over to oil and gas. So I'm going to show you oil and gas is one of the best inflation hedges. Oil and gas is very good. Platinum's very good. And I know not a lot of people know that. And a lot of other commodities are very good as inflation hedges. So I'm going to show you oil and natural gas here in this clip and give you my financial opinion. So here's the price of oil, West Texas Intermediate crude. We haven't broken this downtrend yet, but I'm looking at the actual candlestick pressure, buying pressure patterns here. And this looks fantastic to move higher. We had a little bit of a down day here, which is what I was kind of expecting that. And we're kind of putting in a, you could almost say this is a shoulder, head, shoulder type pattern. So maybe we have another down day. Maybe we go right on up on Tuesday. And we'll see what happens. But a long-term perspective, never lose the big picture view if you guys are investors. I see this chart and I added to my oil holdings recently. And I mean, guys, I didn't have that much money after I put a lot of it in uranium, but I have been adding into some of my oil and natural gas companies because this pattern here, it's going to, this downtrend right here, this downtrend line, it got up on top of it, it pulled back to do a back test. And we're going to compress our little legs and jump off this nice, steady downtrend line to go higher. The timing, not exactly certain, but it's probably pretty soon. Natural gas, well, that thing already is launching higher. It is looking fantastic. And why do you think it's launching higher? When you look at things from the short term, you're like, oh, this is just going up. Maybe I should sell. Maybe I shouldn't. What should I do? That's what people are going to ask, right? Well, let's back out and take a look. Oh, well, that makes it a lot more obvious. On a big long-term perspective, we are breaking a massive pattern, back-tested, compressed our little legs, and jumped higher. This could be a substantial move, guys. And I'm holding on for this fun ride. So what's the company that I like? SM Energy. That is a company I like. It has a lot of debt. I think it's probably going to be pretty supercharged. Probably, I'm going to say next year. And we're getting to next year. It's coming. But this is one that I like. It's got a lot of debt, and we're kind of pulling back here, and we're coming back up, and it looks fantastic to continue higher. That's what it looks like on a big long-term perspective. It looks like we broke through it. We hit our head. We went sideways a little bit, popped higher, came back to do a little back testing. You know, we like our back test, guys. And then I think we're going to move on higher. And I don't see why this company, given if oil prices are strong and natural gas prices are strong, I don't see any reason why it couldn't break its all-time highs up here. I really don't. But I don't want to project like that. One step at a time. And it looks very good where it's at right now. Centennial Development's another one of my favorites. On the short term, it looks pretty good. We have a nice small little candlestick down day here. I don't see any problems. So I think we're going to continue higher. It's probably just waiting for oil to give us the green light go. Looking at it from a little bit longer term view, you could say this is kind of like a shoulder, head, shoulder pattern. It came up, came back. Maybe it wants to say goodbye one last time before moving higher. So we'll see. We'll see what oil does. Crew Energy, this thing's looking good right here. We broke its downtrend. So I think that's just a matter of time. Get oil to go higher. This will probably go higher. Tellurian, same thing. Trying to break through. We got a little downtrend here that we're probably going to try to break through, which is right there. Still haven't broken through it, but it's reaching it. It's getting there. Grantier Energy broke its downtrend. It's moving on up, even on a down day of oil, so that looks very strong. Callum Petroleum, downtrend break, and we're moving sideways right at the moment. Not too bad. Reconnaissance Energy Africa. So a little bit of a sell-off today, 6.28. We might be coming back to this base here at 494. It's kind of an up and over. This is one that it's an oil exploration company. It could potentially have massive amount of oil. They've already hit oil on 2 wells. They're going to be drilling a third. Then they're going to, do 2D seismic, I think. And then I'd like to see this thing move on higher when oil goes. This is an incredibly volatile company. I do have a good stake in it now. So we'll see what happens. Tetra Technologies, energy service company. Started here, bullish engulfing, up, back over, basically came back, and then I think we're going to move higher. Transocean, another one that I like. Nice big buying pressure, small selling pressure. I like that mismatch there to move higher. Helix Energy Solutions. Very similar to the other ones, kind of almost a little double top on the short term. Coming down, and I think I have to see the downtrend break first. We had one break there. Let's see if this goes higher. Comstock Resources looks incredibly good, almost like a uranium stock this past week. Very high. Looks like we're breaking kind of this area through here. It finished strong. It's highly leveraged to the price of natural gas. I own some. Looking at it from a little bit longer term perspective, this thing could go. I mean, here's the downtrend it broke. We got to get up to this next one and break that, and then I think it's free to go. So that one's looking pretty good. That's what I've got for oil and natural gas. This is one of my favorite sectors. I feel like I know a little bit more about the oil and gas, the ratios, and even uranium too. I like those two sectors quite a bit, and I like that inflation is going to get it's going to get its hands into a bunch of things, and oil is an input cost, either through gasoline or fuel, and oil. It's an input cost to a lot of these companies. So rather than me speculating on a on a bet that it could be very difficult, and what I mean by that is if you won't go long in a mining company in copper, what you are betting is that your bet isn't against the copper price. Your bet is against the oil and copper price. Because if oil's going up at a faster rate than copper, your margins are getting squeezed because they are very energy intense and fuel intensive. So I like to take the cost equation out of it and go into the royalty companies for precious metals, for copper, like the base metals, for all the metals companies. Now, I don't necessarily do the royalty companies on oil or natural gas companies because they are directly benefiting from the price increasing because that's what they're selling. So I prefer actually the exploration companies, the exploration production companies in oil and natural gas. Those are my favorite. And especially those with high leverage. Because high leverage or high debt, what happens is if oil and natural gas are highly inflation sensitive, so if the prices go way up under inflationary conditions, the debt gets eroded away through that price increase in oil and natural gas. So I can, on the downside, all of the high debt companies get punished to the max. So I buy these things on pennies on the dollar, and then when they reverse to go higher, I think they're going to do incredibly well because their debt's going to be eroded away through oil and natural gas price. And that's why they're some of the biggest inflation hedges is oil. So when the ratios got really cheap, I got ultra aggressive and said, I'm going big in the high debt companies that have the max leverage to the upside, because my opinion of oil is probably more bullish than anyone that you know. And the reason it's so bullish is the ratios got so low that all of the companies just went into survival mode for a good period of time. That's going to cut back investments. Oil is getting starved of money. What that means is less production in the future, and it could be dramatically less. Some estimates are estimating that we could have a 10 million per barrel a day shortfall, which is 10% of demand between now and 2025. I'll take that bet all day. Huge market deficit right in front of us. And I just bought stuff with a ratio above 50 to 1 in 2020. Now the ratio is in the high 20s. It is still a screaming buy. And by looking at these charts, these long-term downtrend charts that we are breaking and backtesting, guys, I look at this, I'm literally salivating at the mouth and at a loss of words, looking at how people are not buying the heck out of this. We are going to probably encounter a very high price spike. I don't know how high it's going to go, but if I were to, put it up and see where it'd be at, $300 to $600. That's inflation in there and adjusted to a $3,000 gold price of a 1 to 10 ratio, between 1 to 10 and 1 to 5, if it were to get that high. I know that seems crazy, but that's my thumb in the air guess of where that could potentially go and how crazy that is. Now, I want you guys to think of what I just said there. If we go to that price, what is that going to do? Remember, we are going to be in an inflationary period. There's going to be inflation around us. It depends highly on how much people get paid and what that demand does and where the demand starts to falter. But a 10% shortfall, that is ridiculous. We never had a shortfall. Last commodity bull market, when oil went to 140 something, we had a surplus still. If we have a 10% shortfall, I have no idea where that price is going to go. I don't know what that means. We've never seen it before. So I don't want to speculate on that necessarily. I'm speculating on the oil mining companies. I'm not going to speculate on the exact price and the exact time. I'm just saying it's going to go way higher, and I'm going to partake in it. I want some money there, and I'll be glad to pick up more shares in some of these companies on these back tests. And the ones that I'm picking up, I bought Centennial Development, and I bought Reconnaissance Energy Africa, because what I'm trying to wrap my mind around, and I'm just kind of giving you some thoughts here. Recaf, or Reconnaissance Energy Africa, that company is drilling, and they could have a massive find. What is the value of that deposit if the market conditions are like what I just described? I want someone who's got a lot of oil, light sweet crude, that could be accessible and could be produced. If they're sitting on the mother lode, the last, one of few mother lodes left, how valuable is that? And hopefully they keep it. I mean, hopefully Namibia doesn't, do something to take it from them. But I'll be willing to speculate a little bit of money. Now, the mining companies they're going to be rough. So I know we got a lot of mining companies here. So royalty companies I like. If there's an oil shortage and energy becomes very scarce, then I like physical metals in your hands. Physical silver, physical platinum is a way to diversify and hedge against that energy shortage, if there is one. I would think that the metal prices would all go vertical. And I would think that companies would probably struggle quite a bit. Not commodity companies per se, but just companies in general. We'll see what happens. And then we'll see if that price manifests itself the way that I think it might. And we'll see what natural gas gets to. But they're both, I think, going to be in strong uptrends very soon, launching off these downtrend lines. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. And thank you for listening. This is Finding Value.